Hey everyone, welcome to another edition of Market Pulse because I haven't done this in a long time. And I was watching Hyperwave and Tyler Jenks's video this morning with Leah. They were struggling with TradingView a little bit. Yeah, TradingView can be a pain in the ass if you're not using it all the time. I kind of got used to TradingView because I was using it since early 2014, if not 2013. So I have plenty of experience with TradingView, even though I don't even know the latest features. But yeah, so Bitcoin isn't moving. I'll quickly glance at Bitcoin, and after that, we will move on to some traditional markets. Corey, if you're on, yeah, do some questions for me. Shouldn't be too late your time. I really thought I was off by an hour in the opposite direction. I really thought it was only going to be 11:30 in New York, but it's 12:30 in New York. So sorry, guys. I should have woke up a little earlier today. Could have brought you this video a bit earlier, but that's okay. Let me just set up my pop out my live chat. We got 150 live viewers, and let's have a look. Let me make sure everything's working. It is perfect. All right. All right. All right, let's do it. Any other admins on? I think Leah's already sleeping on the East Coast, which is the normal thing to do for people. All right, let's do it. Let's go to screen share. My last full day in Chiang Mai, actually, I can't wait to come back here. Chiang Mai is now going to be added. Like I already have all these like places that are yearly must be at, right? So it's and that list is growing. So like in London, I have to be there once a year. Amsterdam, I have to be there once a year. South America for Latin American Bitcoin conference, I have to be there once a year. I will now speak at every single HODL conference as long as they let me, because I think that conference is amazing. And so now I have to be in Riga once a year. I always speak at Hackers Congress in Prague, so I have to be there once a year. And I absolutely love Chiang Mai, and I absolutely love Kiev, Ukraine. So that's two more places I have to be at once a year. So oh, for your would-be kidnappers, there you go, making the list. I have to be at these places once a year. I have no idea how I'm going to do it because that list continues to grow. Okay, let's do screen share. Share my, I'm going to probably stay on screen share the whole time just so I don't screw up again. All right, the Tone Vase homepage. We're going to start off with the usual self-promotion and shilling, the way this channel always does. That's what happens when you have free content. Maybe one day I'll get tired of free content and go to a subscription model, which I've always said I would never do. But hey, things change. Anything can happen. So where do we begin? Let's look at the workshops. Chiang Mai. Damn it, Chiang Mai is still there. Why is it still here? It's not October 20th anymore. Damn it. Maybe it's still October 20th it's at some parts of the world. So I'm waiting for this box to go away. Obviously, please do not register for an event that took place yesterday. And because the Las Vegas one is going to show up, that's the big one. I still have lots of announcements to do about Las Vegas. This may be a more advanced workshop, and I'll see how I'm going to do that. I haven't had time to think about it yet. But hey, I will spend a bunch of time in Australia, so definitely find me there. And I'm still going to New Zealand. Oh, wow, only 6 seats left in Brisbane. That's great. Yeah, Perth is a small city. I didn't really expect to do much. If you like my work and you want to support my work, please check out the affiliates and referral page of my website. Please go ahead and do that, and that would be great. And finally, the Unconfiscatable conference. I'm trying to get you more speakers. Right after this video, I'm actually going to get back to work of trying to get speakers. I'm going to be emailing and asking people again. Either way, it's going to be a great event. You know, think about registering. Tickets are still only 0.05 Bitcoin. And if I'm right and the price of Bitcoin drops, this becomes a pretty cheap ticket. Or you buy your ticket now, and then if the price drops, you can get your 0.5 Bitcoin back at a much cheaper price. But I will continue to take the currency risk and price the event in Bitcoin. And of course, the poker game, got a couple of more pictures that are going to show up here any minute. All right, that's it for me. Let's talk price. This is the index of Bitcoin. Nothing is changing. We're going to talk more about traditional markets today. Bitcoin, nothing is changing. Let's see what happens next month. Next month is going to be big. I still have this weird feeling, or fear, you should say, that next month will be a repeat of October of 2014, where the price kind of drops and touches the combination of the 76.4% Fibonacci line and the 30-month moving average. That's at approximately 48.87. My initial target is only 5,000, but I'm still anticipating a big drop. Of course, it can go the other way, but that's what my charts are telling me. If you're a chartist and your charts are telling you something else, great. We'll address the hyperwave next month. Things are coming to a tip here. Stop and reverse points. I am now using the index on this one, but the price hasn't changed. Corey, if you're on, grab those tip questions. The 4-hour chart, yeah, I'll get to it briefly. Nothing to see here. We are still in a descending triangle. There's plenty of room on up and down. The week is almost over. Today is already Sunday. It's Sunday for me. It's still Saturday for people in New York. And so we still have room, right? I mean, the triangle is between 6,200, where I shorted the market, and this is next week, not even this week. So the price of the triangle is between 6,200 and what's the top of that triangle next week? 6,900. So as long as Bitcoin between 6,200 and 6,900, it is not interesting. Not interesting. It's just not. As long as it's in that triangle, it's not interesting. So there's no reason. So I think I've beaten that horse long enough and talked about it. The daily chart, we're pulling up a little bit. Again, until we're above 6,900 on normal exchanges that don't have tether panics and temper tantrums, Bitcoin is not interesting. Here is that 12-hour chart. The 12-hour chart is on a 9. It's not surprising we are pulling back up a little bit. So to me, what does that mean? That means that we can go as high as 6,700 on Bitfinex, because that happens to be where my charting is. Look at your CMF. Your CMF is a disaster. So I see this as temporary, and I see this as going back down. Here's the 4-hour chart. Oh, wow. Look at the 4-hour chart bouncing right off the 9. You don't have to believe in the TD indicator. You don't have to use it. You can have lots of trading techniques. I was a trader for years before I learned about TD, and I thought I was a pretty successful trader. The TD made me a much better trader. Here's the 4-hour chart. We broke out of the descending triangle that I had on the 4-hour chart. Let's go and take a look. And this is statistical probability, right? 75% probability that you are going to break out. Sorry, guys, had to sneeze. So how much is that? That's about $300, right? $250. Let's be accurate here, right? So we have $250 in this triangle. I don't care that it's Bitfinex charts. It doesn't matter. So now I can take this. I can copy that. I can paste that. I can take it. I can put it here. I can flip it. And now we are looking to fall $250. Or 3.76%. And there it is. Okay. So here's the deal on triangles. Oh, let me drop it down a little bit. Oh, didn't mean to move that. All right, there's your breakout, right? So this is a triangle on a 4-hour chart. We're looking at a 3.756%. That's about right. Maybe a smidge lower. Oh, I'm moving the whole thing. Smidge lower. There it is. There it is. Perfect. Perfect. And this should be red, of course, because it's going down. There it is. Okay, and we can make this red. And we can make this red. You know, like that, right? So the triangle broke in the statistically accurate direction. This is what happens, right? This is why you play blackjack and double down on an 11 against the dealer 6. I don't remember the odds of you having 11 and a dealer having a 6 of you winning the hand. I believe it's approximately 75% of the time you will win. I will always double down. If I'm betting the last money I have at the table, I will reach into my pocket and I will cash in more money to double down. If I have a friend standing next to me, I will grab my friend and say, hey, pull out X amount of money out of your pocket because I have to double down this hand. I am doubling down the 11 against the dealer 5 or 6 or 4. Open card, no matter what, no matter how much money I have in that hand. Okay, I'm doubling that down. Am I going to win the hand? I don't know. Nobody knows. But what bet am I placing? I am placing the double down bet. Therefore, out of this triangle, 70% chance you are going down. When you start going down, your target is the big part of the triangle. Does it have to go all the way to your target? Absolutely not. If your probability is 70% that you're going to break down, what is your probability that you're going to hit the target? My best guess, 60% chance that you're going to hit the target after you've broken down. So after you've broken down, now your probability of breaking down is 100% because it's already happened. If something has already happened, the probability of it happening is 100%. It happened. It is a certainty. Okay. Now, after this candle occurred, you have certainty that the triangle has broken in the statistically probable direction. What is the probability that you are going to reach the target of the breakdown? To me, in my trading experience, it's approximately 60% of the time. After that, you can reach that target, right? So what does that mean? That means, what is the probability of you breaking down and reaching the target? Well, you have to multiply those probabilities together, right? So when the triangle looked like this, right? When the triangle looked like this, what is the probability that the price of Bitcoin is going to fall to 64.40? Well, in reality, that probability is actually less than 50% because yes, there is a 70% chance you're going to fall. And then there's like another 60% chance after that, that if you fall, you're going to go all the way down. But combining those probabilities, that doesn't mean that you have to go all the way down to this number. And as you can see, we did not go all the way down to this number. We can still go down to this number, but we didn't. If I was a live trader of this particular triangle, I would have absolutely taken my profits off of the 9 because it told me, hey, your market is starting to now, if this started to fall faster, I would have loved to see the combination of 9 and target hit at 64.45 on Bitfinex, but it didn't. It didn't fall as much, and the 9 told me to get out earlier. And now we're approaching a 9. So in about 2 candles, I will be looking for this to go back to the downside. So that's how you trade the TD and the triangles together. This was the most perfect trade. This was the most perfect short trade, but guess what? I was busy on these days. This is the trade. This right here, you see this red 2 breaking below the red 1, breaking the bottom of the triangle. This is statistically amazing. To me, this now raises to 80, 90% that this is the most optimistic trade a trader can make, breaking out of the descending triangle to the downside on a red 2 below a red 1. Forget the time scale. This time scale happens to be 4 hours. Now let's go back to the weekly chart. This is no different, except the red 2 did not break below the red 1. It missed it. But on a 4-hour chart, The red 2 did break below the red 1. And boom, that's what happens. And it went all the way down to a 9. This is what I envision will happen on a weekly chart. They're just fractals. If you don't know what fractals are, please Google fractals. Fractal. Benoit. How do you spell his name? Mandelbrot. Mandelbrot created fractals. My master's thesis in financial engineering was based on Benoit Mandelbrot's work in fractal geometry. That was my master's thesis for my financial engineering program. That's what I did in graduate school, okay? So please go Google fractals and understand what they are, okay? Because these are fractals to me. I mean, the triangles look a little different. This one came off a pop, and the weekly one is coming off a downtrend. The weekly one is even more probabilistic that it would go to the downside than this one was on the 4-hour chart. Anyway, I'm spending way too much time on Bitcoin. Here's the 1-hour chart. Again, no surprise that the sequential 13 was able to get you on the low, and right here, the 9 didn't quite get you to the top, but close enough. Now it is conflicting with the 4-hour chart, but the 4-hour chart could just get stuck here for a few candles, and then you'll still get your 9. It's not going to be a perfected 9. It'll be a regular 9, just like the 1-hour chart. Okay, the short interest is starting to ease off a little bit. That could be a decent sign. I actually wouldn't mind seeing this going all the way to new lows. It would be a very interesting environment. Tether is starting to lose a little bit of value again. The price on Bitfinex is starting to rise, but it's nice that the sequential called the top, even in the spread between indices. The price of Tether bottomed out on a 9, and but now it's starting to weaken a little bit. I'm not gonna. This is just a small pullback. I still think Tether will go back to where it was. Okay, and here comes traditional markets. You know what, guys? Hold on one second. I want to grab a tissue. Give me a minute here. We're at 500 viewers. Still not sure at what time I should be streaming this to maximize my viewing. When I was streaming this at like 2 a.m. When I was streaming this at 2 a.m. Thailand time, I had over 1,000 viewers. All right. Let's get back to charting. Let's talk about traditional markets. My short's doing just fine. Like I said, as long as we are inside the triangle, Bitcoin is not interesting to me. Now, I will probably double down on my short the moment we get back to 6,200. The moment I get back to my entry, I will double down on my short because I want to make up for the difference of the time spent in the red. I would also considering double down at a higher price of, let's say, 6,800, 6,900 or 7,000 if I see certain conditions, which is unlikely. I would probably wait for my trade to go back to the green, and then I would double down. All right, traditional markets. Let's look at the S&P 500. So the S&P 500 finished on a bullish week, okay? That's good. We are holding the setup trend line. The sequential system also never told you to go short here. The only time the sequential system told you to short this entire year was, unfortunately, at a bad time. On a weekly scale, the only time this year, the sequential system. So let's walk through the weekly sequential system, actually. If you were a trader of the TD sequential, okay, how would you do it this entire year? Okay. So, all right, I don't want to spend too much time on this. Okay, I'm gonna create a couple of lines. I'm gonna make this full screen. This will be a good walkthrough of the sequential system. Though if I keep doing this, I'm not sure why people would show up to my workshops if everything I do is free on here. But hey, come out and support anyway. Guys, if I give out so much free content and then you come to my workshop and you're a little disappointed that I didn't have much new to teach. I mean, I still have some new stuff to teach, but that happens. But let's walk through it. I need 3 lines here. One of them is going to be green. One of them is going to be red. And one of them is going to be blue. So you already have a little green line right here, right? So let's delete this line. I don't like to go long on 1s after 9s. So I would play it safe, and I would go back into the market to the upside right here on 27.90. I would then absolutely raise my stop loss to the middle of the giant green candle. That means that the week of the January 29th, I would have been stopped out of the S&P 500 on my bullish trade. I do not trade price flips unless they follow 9s. So this entire giant red candle week of February 5th, I have no position in the market, none whatsoever. The red 2 weekly, February 12th, never went below a red 1, no short play. The red 3 didn't go below the red 2, no short play. The red 4 actually did go below the red 3, but it was nowhere near the bottom of the trend. So even though the sequential technically told you to go short, there's no way that I would, because I'm pretty sure a price flip is coming, because in order to get a red 5, I would need a close below the close of this giant monster crash week of February 5th, and that is highly unlikely. So even though the sequential system did tell you to short, you got to use some discretion here. So there's no way in hell I would have shorted this market. Shorting red 4s below red 3s is fine as long as you're near the bottom of the price movement, but you're not. You're all the way at the upside. So I think that's a very dangerous short because TD is a momentum trade in this case, not a reversal trade in this case. So if you're a momentum, there's 2 ways to trade the sequential: as a reversal from up to down or down to up, or as a continuation. If you are working on 4s and 5s, you're already on a continuation. Only 1s and 2s or 9s are trend reversals. 3s, 4s, and 5s are trend continuation, and you're nowhere near the lows. So you're in the middle of nowhere. So I would never short this on a red 4 below a red 3 in this particular region. But if you did, your initial stop loss becomes the top of the 3 candle, and that clearly got hit the following candle. So the smart thing to do there is not to trade. Now over here, the green 2 actually did go above a green 1, and I probably would have been comfortable potentially going in with a bullish trade, understanding full well that this is starting to look like a bubble chart, like the hyperwave chart, wave 5, wave 6. So I would have been very cautious. I would have went in small. Assuming you did, where's your stop loss? Somewhere in the middle of this giant green candle, because I wouldn't take a chance. So that means you did take a little bit of a loss on that trade. Now here, once again, I would have gone potentially short on a red 3 below a red 2 below the lows. But I know I have major support here. I have the setup trend line support, and I have the long-term moving average support of the 50 week moving average support. So even if I would have gone short, I would have kept such a tight stop that I would have been out with the smallest of losses. So what does that mean? So far we had 1 positive trade and maybe 2 negative trades. One would have gone back into the market long. I would have gone back into the market long on a 4 going above a 3. I would have exited on this doji off the 9. That is a very good profitable trade in the S&P 500. I then would have potentially shorted off of the doji, looking for a 1 to 4 candle pullback. That's exactly what happened. I would have, after this one candle showed up on July 2nd, I would have lowered my stop loss to the top of that candle. That means no matter what, this would have been a profitable trade. 100% I would have gone long on a green 2 above a green 1 on July 16th in the S&P 500. That is a beautiful long trade. It is breaking the prior swing high. It is near the all-time high. There's no way in hell I would have missed that opportunity as a swing trader in the S&P 500. My initial stop loss would have been somewhere in this vicinity, or I might have even kept a very loose stop loss below the swing low, or at least below the most recent moving average. Where would I have taken my profit on this trade? I would have taken my profit right there on the 9 candle. I would have raised my stop loss to the bottom of the 8 candle, and then on the 9 candle, I'm either out if the 9 is showing weakness, or if the 9 started to go up, I would have been out end of the week, because I'm not going to hold this shit into the weekend, okay? I would have gone long again on a green 2 above a green 1. So that means the week of the 17th of September, I was bullish the S&P 500 into 3,000 points, into 5,000 points, into infinity. Basically, the last green week of the S&P 500. And I am not apologetic about this, okay? Anyone on Twitter, any trader that tells you that the week of the 17th of September was something to be worried about in the S&P 500, I would consider that person either almost a TA fraud. Like there is absolutely nothing bearish. The S&P 500 is at a brand new all-time high right here. Brand new all-time high. You had a 9, you had no weakness. You are bullish candle at all new highs. The only people that are bearish the S&P 500s are people that are gold bugs that have been telling you for since the day they were born that the S&P 500 is going to crash and you need to short the S&P 500. They have been saying this since, I don't know, 1980, okay? Like these are the people that missed 8,000% bull run, 10,000% bull run of the S&P 500, okay? Now, I am 100% bullish. I would have my 100% of my retirement account, 100% of my trading, everything. I would have absolutely no fear in the S&P 500 on this candle. I would be in. Where is my stop loss? My stop loss is right below the swing low, right here, right below the swing low. So anyone on Twitter that wants to make fun of, you were bullish at the S&P 500 at the all-time high. Hell freaking yes, I was, because that was the right trade. That was the right trade, because I was also bullish the S&P 500, because that point in time is absolutely no different than this point in time right here in 2012 when we were breaking the all-time high. And then the S&P went from 1475 all the way to 2,134 with one minor hiccup for a month length of time, okay? So this right here is bullish, not bearish. I don't care that there's divergence. I know there's divergence. I don't even have to open it up. There it is. There's divergence. But it's not divergence until last week. Divergence has to the price has to turn. The price hasn't turned yet. Now we have divergence. Now we've proven that the price has turned. Now I am starting to get bearish the S&P 500 because now divergence is telling me that we need to take out the swing low. But at the time, this S&P 500 is 100% bullish, because this is what you're looking at, right? If I maximize this again, you are looking at this candle right here. That's the candle you are looking at. Is it a combo 13? Sure it is. It's a combo 13. So, but there are other 9s involved. This is not a combo 13 on its own. There was other 9s that have already taken place. Did the sequential do a good job to warn you to be careful? Yeah, sure it did. And on the following candle, when you have a bearish harami, you say, hey, maybe I should take this a little more seriously, because if you watched my videos in the past, the S&P 500 topped in January on a combo 13 and a sequential 9 and a bearish harami. So yes, now you have two things to be cautious about. You have the combo 13 and you have the bearish harami, but you have a 10 on the sequential. So maybe you can sneak in, a couple of more weeks. Something to be careful about. Would I think about raising my stop loss here? I probably would. Sorry guys, sneeze again. No, I'm not sick. I don't know why I'm sneezing. Would I raise my stop loss here? Yeah, I'd probably be a little more cautious. Maybe I'd raise it to the bottom of the one candle. And then boom, my stop loss just got hit. Now I'm like, whoa, okay, a little bit of weakness. I'm still on a green 4. Maybe I would not have raised my stop loss. Maybe I would have left it here. You see, it doesn't matter. It doesn't matter because you are doing well. You made a bunch of money in this trade coming up. You're assuming it's going to turn around. And then the next week, all hell breaks loose and you are out of the market. Now you are completely in cash, okay? If you're trading the TD sequential system, okay? Now you have a red 2, it's not below a red 1. If the next candle, if next week is bad, if next week starts bad, I would consider entering a short trade. Where's my red line? I would consider right there. Going short, you're going to be below the 50 period moving average, and you can fall all the way to the 200 period moving average. You're going to be below the 50 period moving average. You're going to be on a red 3 below a red 2, and you have divergence. This divergence is now serious, and I don't give credit for people that call it, prematurely, because they call so many things prematurely. They're wrong 80% of the time, but they're cheering the 20% of the time they are right. I would rather be right 80% of the time and be ridiculed the other 20. I have no problem with that. Here you have divergence in the RSI. You probably have divergence in the MACD, and you do. You have divergence in the MACD, and there it is. Or you can use the cross, that's fine. And you have it says classic divergence, guys. Classic divergence. You know what? I don't need these. Sure. Classic divergence right here. Boom. Dark green. All right. There's your divergence. So what does that mean? That means that the price has a high probability, above 50% probability, that the price is going to take out the swing low. That is a tradable probability, but you don't know that the divergence is legitimate until after you break this blue line. You have to have a very clear reversal in price first, okay? And then you can go ahead and use divergence in your trading strategies. And now I need the sequential, I need the break of the setup trend line, I need a close below setup trend, I need a close below the moving average, and I need a red 3 below a red 2 and divergence. So how many things is that telling me? These are all the things that are telling me that we are going to go lower than the swing low. That's 4 things are telling me we're going to go lower than the swing low, and that is enough for me to consider a bearish trade, a short trade in the S&P 500. So am I still bullish the S&P 500 for the next 3 years? Absolutely. Can we fall to 2,400 and still break 3,000 next year? Absolutely. And this is what a lot of people don't understand, because they've been trading for only a day and a half. They're going to keep saying that, Tone, you were bullish at the top. Of course I was bullish at the top. What else am I going to be at the top? When unless I have a doji, unless I have a 9 sequential, unless I have a reason to consider this being a top other than praying and hoping, unless I have a technical reason to be bearish at the top, I'm not going to be bearish. I'm not going to be bearish at the top. I'm going to be bullish at the top. This is the time to be bearish, and this is the time to take on your probabilistic trades. Are they always going to work? No. But if you go short at the all-time high and then it goes up 20%, you have no idea what to do. You are lost in a position. I'm never lost in a position. I always know what I'm doing in my position. I'm not lost in my bearish Bitcoin position right now. I know exactly what it is, and I know exactly why I made it, and I know exactly when I made it. Okay, done with the S&P 500. Here's the daily chart. The daily chart is not looking good because the next one is going to be a price flip. I was hoping we can get to a back test of the moving average crossover, but S&P was too weak. It was too weak to get there. I missed it. I didn't do a video. I mean, there was a 9. There was a reason that you can have a 1 to 4 candle correction off the 9, but it took place literally on the 9 candle and a bit the following day. Now this is it. If Monday is a bearish day, I would consider this thing to be a short. You can maybe go. If I was live trading this thing, I would consider a nibble on a short and double that down on a red price flip. Double that down again on a red 2 below a red 1, below a the swing lows. Like I would leg into the short trade. Like double down, double down, double down. Remember, guys, you can double down 8 times if your initial position is small. Okay. It's funny how half the people think that my one Bitcoin trade is making me wrecked, and the other half the people think that I'm a cheapskate. But that's because I left myself the opportunity to double down. What's the best way to short the S&P 500? I use options, but you can short the ETF, the S&P ETF. You can also buy the inverse ETF. There is like inverse ETFs, right? SPX or inverse. I forgot what it is. Or futures markets. Actually, it's futures. I used to. I just sell a future. That's the best way to short the S&P 500. Sell an E-mini future, but they're leveraged 50 to 1. So S&P futures are leveraged 50 to 1, and that's the mini futures. The PV futures are leveraged 50 to 1. The big boy, the real traders use the big boy futures. They're less liquid though. The big boy futures are leveraged 250 to 1. I used to trade those too. The S&P futures, the SP futures, they're leveraged 250 to 1. So BitMax still behind. 250 to 1. That's traditional markets, guys. If you think traditional markets don't have volatility and don't have leverage, you're clearly new here. You're clearly new to trading. There's an inverse S&P ETF as well. I forgot the name of it. Doesn't matter. Okay. Gold. Gold is going up as the S&P 500 is going down. This is normal. I don't think the S&P 500 is going to be going down for very long unless Trump gets impeached. If Trump gets impeached, it's over. Remember, my bullishness on the S&P 500 is fundamental. Fundamentally, I expect Trump to be president another 6 years. And with Trump president, I expect the stock market to be bullish. If Trump gets impeached, all of that goes out the window. If a socialist gets elected, all of that goes out the window, right? If Hillary or Bernie Sanders get elected, or another socialist gets elected, I will no longer be bullish the S&P 500 into the next decade. So my bullishness of the S&P 500 is fundamental. You can disagree with my fundamentals. You can say that I'm an idiot, my fundamentals are wrong, and that's fine. That's your opinion versus my opinion. Fundamentals are opinions. So if the Democrats start to win like the Senate and the House, I will no longer be as bullish the S&P 500. Well, TA doesn't take a backseat to FA. They're on different scales. So here's the thing, right? FA is at a different scale than TA. Sure, you can use like yearly TA, but I'm a swing trader of TA. I am long-term FA, right? So for example, I have spent 5 years doing fundamental analysis in the crypto space. And here's where my fundamental analysis in the crypto space stands. Bitcoin is investment grade. Everything else is as useful as manure. That's the conclusion of my 5 years of fundamental analysis in the crypto space. Now, because I believe that Bitcoin has great fundamentals, I will use technicals to time my fundamental view of Bitcoin. I am long-term bullish Bitcoin because of fundamental analysis, not because of technical analysis. I am medium-term bearish Bitcoin because of technical analysis. That does not interfere with my long-term bullish view of Bitcoin using fundamental analysis. That's why I'm a hodler of Bitcoin. Fundamental analysis is more important than technical analysis. You know, there is a reason why Tyler Jakes manages people's money in America and not people's money in China or Russia. Oh yeah, we can take a look at the VIX. I haven't looked at the VIX in a long time. Gold. Fundamentally, I don't like gold. Fundamentally, I think silver is terrible. So again, let's go fundamental analysis on gold and silver, right? Let's pull up silver. Low chart layout, SLV. Oh, actually, no, not SLV. Silver. Silver weekly. I think fundamentally, silver is terrible. I think silver is a terrible, is grossly overvalued based on its fundamentals. You know what changed my fundamental outlook of silver? The Bitcoin standard by Saifedean. That completely overhauled my fundamentals of silver. So to me, silver is grossly fundamentally unsound versus gold. I think gold is a lot more fundamentally sound than silver is. Now, having said that, I believe that gold is still, I'm still bearish gold, but I'm even more bearish silver. Now, is it possible that silver has overshot to the downside versus gold? Yes. Can silver pull back a little bit more than gold short term? Yes. Is silver more likely to go below $10 than gold is below $1,000? Absolutely. So I am bearish silver to below $10. Now, as you can see, silver bottomed at a sequential 13. There's another sequential 13. I think silver is about to turn around and go back down. I think gold is about to turn around and go back down too. All right, let me see. Man, the Aaron been stuck in this apartment all night. Should probably go outside today. Let me see here. Oh, I was looking at the Thai bot the other day. You know what I was doing? I'm trying to utilize lists more. Let's yeah, see that the Thai bot isn't doing anything right now. It's on a def cross though. So the Thai bot might actually appreciate. Oh, I'm looking at it from the opposite side. Sorry, it should be USD. Oh no, wait. I am looking at it. It should be THB in USD. No, that's what I'm looking at. Sorry. It should be USD in THB. That's the one I should be looking at. Yeah, that's the one I should be looking at. So you can see that Thai baht will probably be depreciating against the US dollar, unfortunately, for them. Good for us. Let's look at the euro. I wonder if I turn this euro on. So like I said, I'm trying to utilize lists. Are my annotations here? Yeah, I think it removes my annotations. I forgot what chart I was using before. But anyway, here is the weekly chart. Why is it weekly? I guess I can flip that around. Here's the daily chart of the euro. Let's look at the weekly chart. Here's the weekly chart of the euro against the US dollar. And I think it's done. It's sitting on its final leg of support, right? So right now, the euro strength, the euro broke out. The euro had broken out of this 2-year consolidation at the lows. And now it's done this inverse head and shoulders thing. Your moving averages have crossed. And I think the euro is in trouble. I think the euro is going to parity against the US dollar. As far as timing your trades go, you had a 9 at the high. And now you're dealing with a countdown. What are my countdown numbers? Turn them off. There, we're on a 5 of 13 countdown. So that's the euro. Here's the pound. Oh, beautiful. Jesus. Guys, this is what you trade for. If there is nothing wrong with making one trade of the British pound this entire year, maybe two. You did have, a combo 13 at the high, right? So if you like the combo 13 trading, you're careful here, even though to me this would be bullish with a tight stop loss. But right here, if there's only one trade you make in British pound this entire year, that trade is here. 9 off the doji. Like, it doesn't get any more TA than that. If you are a trader of the sequential system, you don't have to be a trader of the sequential system. But when you have a 9 on a doji at the low, at the yearly low, like, it doesn't telegraph, like TA doesn't telegraph you a trade better than this. Beautiful trade. How profitable would it be? I don't know. It depends on your leverage. But that's the one trade you make during the year. Okay, so what other currencies can we look at that are critical? Let's look at AUD because I'm going there. I'm curious when I should exchange my US dollars. AUD USD. So there are 4 currencies that you need to graph in terms of their local currency versus the dollar, and that's euro, pound, Australian dollar, and New Zealand dollar. All other currencies on Wall Street are charted in the opposite direction, USD versus that currency. But these 4 are traded as local versus the dollar. The rest are traded as dollar versus the local. Oh boy. So one Aussie dollar is 70 cents to the US dollar. That's great. I am not in a rush to exchange my US dollars for Aussie dollars. And this should be obvious. as to why. I just made, this is 81 and this is 70. So that's about I don't know, 13% fall, 12% fall in the Aussie dollar on a weekly scale this year alone. You wait. You're on a 7 of 13 sequential. What is this? Australia unemployment rate. It's the US stuff. Okay. So you're on a 13 of 9, 13, 7 of 13 sequential, and 3 of 9 on the setup. You're below all the moving averages. They're all trending down. This is bad. This is not good for the Aussie dollar. Working at bottom. Oh boy. Oh boy. Oh wow. Jesus, guys. Well, you were doing very well. This is bad. This is really bad. So the moment your currency falls below 0.69 to the US dollar, it'll probably go back to the 2009 lows of 0.61, and then it'll probably go lower than that. Like, I am not very optimistic here. This is Australia is going to be cheap for us, I hope, for Americans anyway. I guess I'm still an American. Haven't dumped that passport yet. A 9 at the high here, a 9 at the high here, 1 week off. Yeah, I'm bearish the Aussie dollar. But I was bearish the Aussie dollar, especially here. See, you guys have to realize that shit accelerates once you break lows, right? So the moment the Aussie dollar broke the prior swing low, it accelerated down. The moment it broke the swing low below that, it accelerated down. The moment it broke the low below that, it started to accelerate down. Where is the next low? The next low is here. Now, how long will it take to get to that low? May never make it. May make it there in 3 years. But when it does, and it breaks this low, it will probably accelerate down. Where is the next low? It's down here. It's so difficult to reverse the cycle. It is so difficult to reverse the cycle. Look at your moving average lines. They crossed. Not good. Not good. I'm also going to New Zealand. NZD/USD. Let's take a look at that. It looks identical. I don't see a difference, which makes sense. They're usually similar. Same exact thing. Same exact thing. I'm bearish. I'm bearish the New Zealand dollar. Am I going to be wrong? Is the New Zealand dollar going to be the future global reserve currency going all the way up? It's possible. What are the chances of that happening? Not very high. Not very high. You had a 9 at the low. You went lower. You broke the swing low. You didn't have a red 2 below a red 1, maybe a little bit. I mean, I would be bearish. I'd be bearish. Any other currencies we should look at? Or Corey, oh, VIX. Somebody want to look at the VIX. What is this? What's the? Oh, this is the Thai baht chart. Yeah, I don't really need the Thai baht chart. Rename. I don't know. FX watch list, because like I want to rename the chart as a watch list chart. and then it saves on anything, FX watch list chart. So let me now close the FX watch list chart. Let me open the VIX chart. Let's take a look. Oh, Canada. Yeah, we can look at Canada. Here's my VIX chart. I'm using bar charts. Not sure why, but I am. You can go to candles. I don't see anything useful here, unfortunately. I don't have an opinion. Someone make a meme of this. I'm looking at a chart. I'm using TA, and I have no opinion. You are on a red 4, trending upwards. Next candle is going to be a green price flip. I have no opinion. Remind me to look at VIX in a couple of days. Let's look at the weekly VIX. I also have no opinion because the weekly VIX is on a green 2, not going above a green 1. So, and it's a bearish candle. So I have absolutely no opinion on the VIX in either direction or either time frame. We can look at the monthly VIX. Always curious. Oh yeah, I can't look at it like this. I need how I don't like that color. I guess I can leave it. We didn't have many 9s on a monthly VIX in sequential. There must have been a 9 up here at the high because of the setup trend line. Hold on. Too many numbers. Oh, it wasn't at the high, unfortunately. It was a 9 here. Yeah, the monthly sequential didn't do very much. 13 right at the top, 9 right at the bottom. That would have been nice. Weekly, 9 right at the bottom, 9 right at the high. You see, what you guys have to understand about these indices. This one was interesting. It's a buy at the high. That's weird. How does that happen? Oh, that's how it happens. I see. So it was a 9 at the low, but the week ended like that. Yeah, that makes sense. That makes sense. That's a great buying opportunity right at the bottom. You see, you don't have to top on a 9, but when you top on a 9, you take that top seriously. Yes, the TE sequential works on everything. It will probably work on my I don't know, viewer watching live stream numbers. Like it's a natural rhythm human emotion indicator. It works on anything that requires human emotions. It's a time-based indicator, has nothing to do with price. All right, let's go back to currencies for a minute. How long have I been on? I've been on for about an hour. Let me load chart layout, FX watch list. Wait, where is it? Didn't I save a chart as FX watch list? So what happened to it? Did I not hit save button? I didn't hit the save button. That's why. Rename. FX watch list. Save. Okay. Thought I did that before. Okay, now we have it. Trying to utilize watch lists better. So somebody wanted me to take a look at Canadian dollar. So that's USD, CAD, US dollar and Canadian dollars. Oh, I should probably click on it. Oh, and somebody wanted me to look at the Swiss franc, but they wanted me to look at it in terms of euros. So I'm going to do USD CHF. And also EUR CHF. And JPY we should probably look at. So USD in JPY terms. All right, then we'll move on to other stuff. All right, so US versus Canada. Not looking good for the Canadian dollar, guys. You see, you have now had, this is a weekly chart. It only takes me 3 seconds to look at a chart and like identify if it looks good or bad. It's not looking good for the Canadian dollar. 9 at the high, 9 at the high, 1 candle off, 9-ish near the high, aggressive 13 at the low, nice. You are on a price flip. Just look at this chart, right? Forget the other crap. You are higher high, higher high, higher low, higher low, higher low. Nice cup and maybe a handle. So once you go above, once the Canadian dollar is weaker than 1.3275 to the US dollar, this thing sure is to accelerate to the upside. You see the difference? Right here, when you're above $1.32, you are hitting the end of the momentum exhaustion with the 9 sequential. And now you're going back to that vicinity on a green 2 above a green 1 with 7 more weeks of momentum to depreciate the Canadian dollar. So that's not good for the Canadian dollar. So I am bearish the Canadian dollar here. Okay, next. US dollar versus Swiss franc. Same thing. Cup, handle, inverse head and shoulders. I don't care, whatever you want to consider it, right? You see, when we reached this top in the past, we reached it on a 9. So momentum was exhausted. Beautiful 9 at the low. I know by this arrow, it was a 9 when the candle started, weekly candle. You got stuck at the top. You went down a little bit. And you are now on a 4 sequential. So 5 more weeks of upside. I'm expecting the Swiss franc to, it's at parity with the US dollar. So I'm expecting it to weaken. So I'm expecting Swiss franc's been pretty stable, but I think I'm expecting it to break out. I think the Swiss franc, like all signs point to the strength of the US dollar right now. Here's the Swiss franc versus the euro. And here it's not as good. Well, it's good for the Swiss franc, right? So here, see how wow, that topped on a 9. Gotta take him seriously, guys. Take him seriously. Sequential 13 followed by a 9. Beautiful. And that was the yearly high. That was the 2-year high. That was a 3-year high. The 3-year high came on at 13.9. Beautiful. So this is this was like a short term. So this is the euro versus the Swiss franc. So the Swiss franc is weakening against the euro right now. So yeah, so it's euro in terms of Swiss francs. So it's weakening right now. Maybe a few more. I don't know what happens when I draw on this. Do the drawings go away? So maybe a little bit stronger. And then I'm expecting this. And this is going to be green. So look, double bottom, lower high, breaks the bottom, accelerates down, makes a lower low. As long as this reverses on a lower high, you have the def cross. You can pull into the moving averages. Hey, what are my projections? Am I using the wrong moving average? Yeah. I'm using the wrong moving average. Hold on. Favorites. Triple MA forecast. That's what I should be using. Nice. So we're going to pull into the moving averages, and then I'm expecting it to go down. These are all weekly charts. I really don't want to go into the daily charts. And finally, the yen. So if I go back here, do the annotations stay? Yeah, they stay. It's a daily chart. Interesting. Beautiful gravestone doji on the aggressive 13. Wow. Nice 9 at the high. Nice 9 at the low. Turned into a 1 by end of week. This one was tricky. That would have been hard to time. Oh, let's see. This one is a little more complicated. Oh, it's a triangle. It's hard to say. I'm neutral. I'm neutral on the yen right here because what you have on the yen, here's what you got. I'll adjust it. Yeah, it's not that clean, unfortunately. Oh yeah, look at that. Look at that. There you go. That was a 3-year triangle. And it looks like it's breaking out. So this means that the Japanese yen is more, this should not be red, this should be yellow because it's neutral, or orange. Neutral colors. So to me, the Japanese yen is bearish against the US dollar. So again, everything is bearish against the US dollar. All right, enough FX. The home builders look terrible, absolutely terrible. Now, I'm creating lists for like sectors and subsectors. This is a beautiful example of what happens out of a triangle. This is what happened with silver, and this is what I'm expecting in Bitcoin. Unfortunately, it's just statistics. Does it have to happen? No, but that's my bet. Close that. So what do we got? So I need to make this. I need to make a new chart. Load chart, make new chart, make a copy. This is going to be the sector watch list. Because I created a watch list for sectors. Let's go through the sectors of the spiders. Because I saw Tyler do this, so I wanted to do it as well. This is the financials. Let's turn on the moving average. Not looking good for the financials. Looks very ugly, but I would not short yet. I would wait for a back test or something. Like it looks ugly, but it's not tradable. Let's go through it quick. Energy. Looks very bad. It's too late. Unfortunately, it's too late to short energy, right? The red 2 below a red 1 showed up below the averages, crashed. Even shorting on a red 4 would have been okay. But next week, there's a 9. Like I'll never short on a 9. That's what I look for, a rebound to the upside. So looks ugly, but probably due for a nice strong rebound in the energy. Consumer staples. Consumer staples looks strong. Wow, talk about a sector rotation here. Consumer staples looks bullish. Didn't see that one coming. These are all these are all daily charts, not weekly charts. Sorry. So here, check this out. Beautiful 9 on staples, right at the high, right at the all-time high. Jesus, beautiful, beautiful. 9 at the low and the doji. I mean, this is what you live for, right? This is your trade to the upside. Get out on a 9 on the upside. Bullish. It's bullish. Like it's crazy. The market is looking ugly as hell, but look at the staples. Well, it makes sense, right? Actually, it does make sense. Staples. I'm thinking discretionary. I'm an idiot. Staples look good, relatively speaking. These are your, toilet paper. Everyone's going to go out and buy toilet paper because they're scared the market's going to crash. This is like Procter & Gamble, Walmart. These are your consumer staples. I should put discretionary next to it, and I did. Discretionary looks terrible. This is ugly. Again, this is the trade you live for, right? You short right there. It topped recently on the aggressive 13, and this is the short. This is the short of the discretionary. You can go long staples, short discretionary. Beautiful. Red 2 below a red 1, breaking the swing lows. RSI, MACD, both ugly. Don't talk to me about divergence. The price haven't reversed yet. This thing can fall like 20% and your RSI will go to like 10. Okay, so no divergence yet. Has to reverse first. Beautiful short right there on a discretionary. Daily. There was another short right here. Red 2 below red 1 or red 3 below red 2, breaking the moving average. Def cross below the long-term moving average. You had the 9, you had the 1 to 4 candle correction. I mean, man, if I was writing the textbook on this indicator, I'd probably use this. Perfect. All right, let's take a look at technology. Technology is hanging in there. Everyone still wants to buy the new iPhone. So the technology is doing okay. And it's being held by the moving average. Overall bearish look, but not tradable right now. Not tradable. Utilities are doing okay. Beautiful shooting star of the 9. Nice short 1 to 4 candle correction. Beautiful doji telling you to take the profit from your short trade on a short time period, and now you're bullish. Utilities are looking great. God, a few months ago, another 9 at the high right here. Why am I looking at oscillators? Another 9 right at the high. Combo 13 at the high. 9 at the high right here. Beautiful. Telling you to take your profit. A few months ago, or like a year ago, who would have thought that like when Tyler was showing me sector rotation and like utilities have been the worst performing sector for years and technology has been on a tear. It takes one hell of a pair of onions to short technology and long utilities in a sector rotation. I guess I know Tyler was talking about it, and I thought there's no way in hell I would do that trade. But that's the difference between 40 years of experience in sector rotation and a person that believes that we should have teleporters by now because of technology. What are we looking at here? Healthcare. Healthcare is neutral, but healthcare is looking like it could be a good trade. Healthcare looks like exactly like the S&P 500. Healthcare is probably very correlated to the S&P 500 today. And it had its rebound. Wow, it looks identical to the S&P 500. Jesus. Yeah, it's pretty bearish. It's looking like there is a nice profit to be made here going down to the long-term moving average. Industrials. Ooh, industrials are ugly. Industrials are bad, just like consumer discretionary. Beautiful short trade on the industrials. Red 2 below red 1, below the swing low. A little overextended here, but nothing is perfect. 9 at the high, followed by a reversal candle. I'm not going to draw on this. Forget it. It doesn't matter. I need to actually move on with my day and do work. Again, I procrastinate work by doing live streams. Materials. Materials look very ugly, very overextended. The real short trade was this red 2 below this red 1. We didn't make it to a 9. We had a bullish day, but it's a new round of shorting. But it's on a combo 13, so be careful a little bit, but I'm still bearish. It's just overextended. Like, this is not the time to short. You're way overextended. The short should have taken place knocking out this low. It's just overextended to me. You could keep your risk low, but I don't know. All right, real estate. While the home builders are getting beaten the hell out of, real estate's still doing okay. I think it's a little overextended. I think it's just bouncing back. I would love for the real estate in the US to crash so I can buy some cheap ass properties. I've been waiting for that. I think the property in the US is still too expensive. And finally, communication, which I'm not even sure if that's I think there's only like 9 seconds. These last two, I'm not sure if they're true sectors. There are a little, I think they're subsectors. I gotta check with Tyler. He's the sector expert. I always thought there were 10 sectors, but for some reason this is 9 and this is 10 and 11. It's been like 5 years since I've traded using sectors. Oh, bonds. Shit, we should look at bonds. Yeah, I don't see that. That's not tradable. I don't see anything. 9 here, but that's it. Okay, so that is my sector watch list. Should look at bonds. All right, let's close this. Let's close this. Should look at bonds and yields. Let's see. So we have 10-year yield. Oh, I thought that was a spread. Shit. It's DSG 10 as well. All right, so here's the 10-year yield. Oh, this is not good. Wow, I must have drawn these lines a long time ago. Yields are going to go up, boys. 9 at the high, 9 at the high, little bit of consolidation breakout. You buy the yield, so you short the bonds. It might be over. We had a double bottom. That's rare. But remember, oh, this is monthly bonds. Oh, that's perfectly legitimate then. This is monthly bond yields. On a monthly scale, a double bottom along a 5-year span is perfectly legitimate. Beautiful 9 at the high monthly. Beautiful doji right there. Yeah, this is interesting. What's my other yield? This is the weekly. This is the oh, okay, I see what I did there. I see what I did there. Okay, so these are your yields. This is your two, this is the 10, the 2, the 5, and the 30. Now, which color is which? So blue is the 10, red is the 2, purple is the 5, and green is the 30, right? So let's see if we have an inverted yield curve. We do not. Oh, wait. Yeah, we do not. We do not have an inverted yield curve. Everything is legit. And yields are rising. I see what I did with that chart. Bonds. Italy bonds. 10-year bonds daily. USB 10. Let me see if I have USB 10. Oh, that's the only one I have. Okay. Oh yeah. Oh yeah. You short that. You short that bad boy. Oh yeah. Look. Boom. Red 2 below red 1. Short. Boom. Red 2 below red 1. Short. You got the 9. You take your profit. Did this red 2 go below this red 1? Not really. Price flip. Boom. You short. You just broke setup trend. I mean, it's a little overextended, but goddamn. Wow, bonds are in trouble. Oh, this is monthly chart. Let's look at weekly. On a weekly scale, red 2 went below red 1 a few weeks ago. Now it's coming close to a 9 now. Everything got reset. Everything reset with a bullish 9. It's a brand new 9 count to the downside here. Let's see if we can get to a 9. That's the weekly. Do we care about the daily on the bonds? Beautiful. Aggressive 13 at a doji at the low. But you're short. You're short on a daily. Red 2 below red 1. Done. Short on the daily. Not good for the bonds, guys. Let's save this chart. Let's close the bonds. Cancel that. Close the bonds. Close the bonds. Close the bonds. All right. I didn't even talk about equities. Shit. Goddamn. I think I'm gonna end it with the equities here. Oh, I didn't even go to your Q&A. Corey was there. Oh my God. All right, let me go through equities real quick. This might be a 2-hour video. I don't care. I'm procrastinating work. So here's Amazon looking terrible. It would be fitting for the next 10 years if Amazon raised, doubled its minimum wage right on the day the market topped. We're doing so well. The economy is doing so great. We're gonna pay everyone twice as much money, and then that would be the joke of the century if Amazon, goes down the way, like, I don't know, Someone comes up with a better Amazon or something. I doubt it, but that would be hilarious. So what I need to do is I need to create a, so I can walk through the charts quickly. Make a copy. Let's do stocks, US stocks. US stocks watch list. Let's close Amazon. All right, I have my sequential. You know what? I need to put the sequential second, not first. Because this way it's just easier to see them. And I'm gonna turn off the numbers, just too cluttered. Here's the Amazon daily. Should we look at it daily or weekly? I don't know. I don't know what's better. Let's look at it daily. Next time I'll look at it weekly or something. Not good. Let's go to the watch list. Stocks, US stocks. Nope, those are the exchanges. Tesla. Bearish posture. I don't see a trade. Google. Bearish posture. I don't see a trade, but leaning bearish. Very bearish. Amazon. Bearish posture, don't see a trade. Apple. Ooh. Very bearish posture. Beautiful trade if you get a red 2 below red 1. Because it's got plenty of room to fall. Netflix, holy shit. If it goes down on, if it starts going down on Monday, it's probably a beautiful short play, knocking out the lows and going lower. So Netflix is nice, 9 at the high here and here, 9 at the low there. AMD, oh boy. Now there was certainly reason I was bullish AMD here, and I think I told you guys to get out of that bullish trade, break even. And AMD is now looking terrible, but the earnings are coming. So, oh yeah, this is bad. Unfortunately, it's a red 1, not a red 2. You can go back to my video where I said on this candle how bullish I was AMD, and I was, and the following candle as well. But after it closed right there and then started trading lower than that, like basically here's the problem that people that don't know anything about trading have. You are allowed to be very bullish. You can be very bullish here on AMD at 26.75 and very bullish on AMD at 27.75 and very bullish AMD at 28.20 and very bullish AMD at the very, very top of 28.54. There's nothing wrong with that because you made a bunch of money on this bullish trade. And then you start to get nervous at 27.29. You get out of your trade at 26.55, and you can probably short this thing. Unfortunately, it's a red 1. If only this was a red 2 below red 1, I would be completely shorting this thing at 26. And now that we've broken the lows, this thing is a full-blown short. But watch out for earnings. AMD looks terrible. Very bearish. Oh, Facebook, beautiful 913 at the low. Doji after a little bit of an uptrend. Facebook is pretty bearish. A red price flip and a red 2 below a red 1 gets me into short Facebook. Doesn't look good at all. And Ford, tell me that's a 9 at the low. Oh my God. Whoever asked me to look at Ford, you better have done something with it. Because I was looking at Ford for someone in the live stream, and I told you the 9's coming, so Ford should rebound. Beautiful bounce. The low was 820, bounced right on the 9, 858. I mean, you wait for this, and that's when you buy it. If you zoom in, I guarantee you buy this sucker off of a doji or a shooting star at 10 in the morning or 11 in the morning. I'm going to zoom in onto Friday, and I guarantee you, if I was trading this thing, if I was still a day trader, I would have been looking for the daily 9. I would have been like zoomed into the 10-minute chart. I would have bought this thing at around 10 or 11 a.m. Right off some kind of a reversal candle. Let's see what happened on 10 a.m. 10-minute candles. Let's find the opening day candle at 10 a.m. Here's your 9:30. Oh man, it reversed early in the morning. It didn't reverse at 10 a.m. But oh wait, what am I missing here? No, wrong day, guys. My bad. I went too far back. I forgot it wasn't Bitcoin. It doesn't trade 24 hours. Is that my 10 a.m. reversal? That's my doji. That's a 10:30. I would not have traded this at the open. I would have been too scared. It was crashing at the open. The 10 a.m. was actually a high. I would not have traded it. I would have waited for the secondary low. Somewhere around here, I would have gone in. Unfortunately, this did not happen the way I expected. It usually does. It didn't this time. But no, am I gonna sit here and play the hindsight is 2020? I would have bought Ford at let's go to the 1-minute candle. Am I gonna sit here and tell you guys that I would have bought Ford on that daily 9? Holy shit, it's a 9 at the low on a 1-minute candle. Am I gonna sit here and tell you I would have bought Ford at exactly 9:33 a.m.? Hell no. Hell no. Maybe if I was watching the 1-minute candles and I saw the 9, I would have considered it over here. If I was trading 1-minute candles, realistically speaking, I would have bought it here. That's a 9. That's probably the price flip. That's probably a 2 above a 1. That's not even a price flip. That's probably the 1 candle. But either way, you're eyeing this stock this day to buy it off the 9. Beautiful, beautiful, beautiful trade. And finally, marijuana stocks. Let's go back to daily. Neutral leaning bullish here. Neutral, it held up. It held up well. I need a bullish price flip, a green 2 above a green 1, above the highs, and this thing could go higher. All right, I think I've spoken long enough. Eric, I see your question. For the stock, it's discretionary. There's no rule of thumb. I have a rule of when to get in. I don't really have a rule on the stop losses. It's kind of trader preference. Oh man, am I in the mood for questions? Let's see. Let me see how fast I can do this, Corey. Let's go back to the price of Bitcoin. Let's see what's going on there. That's a 9. It's a 9. May not stay that way. It was a 9. On the 1 hour, it's coming to an end. All right, let's go through your questions real quick. Oh, before I do questions, hey guys, check out the Unconfiscatable conference. Trying to put in a lot of work here, and trying to bring you good speakers, Max Kaiser, Peter Todd, the usual morning crew. Trying to get some good speakers as well. I've reached out to them. Let's see what they say. And homepage, workshops. I guess it's still the 20th somewhere, in America. So this will come off tomorrow. The Vegas one is going to show up, and I'm going to finish off Australia, going to Singapore and Australia next. And finally, if you like my work and you want me to continue to bring you this content, please check out the affiliate codes. All right, questions. Where do we start? Shit, where do I start with the questions? You send me too many messages. What's today? October 21st, right? Okay. Thank you for your $5 tip, Omega. The 4-hour chart. Yeah, I did take a look at it. No, I don't think we've broken any trends at all. Could you ask Tone to look at the Sensex, please? What the hell is Sensex? I'm only looking at it because I'm curious what it is. Oh, is that, wait. Oh, it's the India stock market. Okay. Should I look at the end of day index, or I'll look at it from their point of view. So the India stock market topped on a 9, a perfected 9 no less, on a daily scale. I'm not surprised. It's not looking good. Bottomed on a 9. It's not looking good though. You're on a red 1. You're near the lows. Tomorrow, a red 2 below a red 1 gets you short. Let's look at the weekly. Did not top on a 9. Would have been tricky. I would have, lost money on at the top. I would have made money. Would have made way more money going into the 9. I would have been back long, and then I would have had my stop loss hit. Nice 9 at the low. Damn, missed the 9 by 1 week at the high. See, it bounced off the long-term moving average of the 50 here. Yeah, why is that a 3? I don't want that to be a 3. It's 3,730. No, I don't want that. I want 30. Or I want 7, 30. Oh wait, number of candles to use for linear regression. Sorry, that should be 3. Wait, cancel. Hold on. I don't want to mess with parameters here. I only want to mess with 730, 50. Okay, no, that's fine. Yeah, see, now you're below the 50-period moving average, and you're on a red 5 weekly. This is bearish. So your India stock market is bearish right now. I should make one global indices. So make a copy. Global indices. Please spell indices. I can't spell. Oh, and it says the word copy. Damn. Make a copy. Great. I clicked the wrong thing. Rename. Okay. So now that's my global indices one, and I'm going to close it. All right, next. And thank you for your tip, Pershish. Partesh, sorry. My short's doing just fine. I'm not worried. Please tell Tone this is unbiased trading decisions have assisted my family trading decisions, or his unbiased trading. We are very grateful for his work. Thank you. Next. Is there a maximum percentage you will risk on a swing low stop loss setup when entering a long trade when agreeing to? No, there isn't. See, that's the thing, right? There isn't a maximum percent stop loss. What I would do is I would lower my my entry size, right? So if I'm forced to have a stop loss 20% lower than my entry, I will just make that a small trade. So if the trade loses 20%, I'm not hurt. Like the chart tells me where to set the stop loss, not how much money I will lose based on that stop loss. And this is what something people don't understand. Like if I shorted right here, my stop loss might even be the all-time high. So you're gonna say, holy shit, how is your stop loss 30% away from your entry? Well, if my entry is small enough and I lose 30% on that trade, I'm sleeping like a baby at night, right? So I adjust the size of my trade based on how far away my stop loss is. If my stop loss is so clean that my stop loss is so close to my entry, I can go like my entire retirement account on a trade because my stop loss is so close to my entry. But if my stop loss is so far away from my entry, I have to make a small trade of small position size. I like the stop loss is my king. Position size I adjust. All right, next. Thank you for your tip. Thank you for your tip, Stephen. Can you please look at AMZ and APPL? What the what the hell is APPL? APPL? I think you mean AAPL, which is Apple, which I did look at. And AMZ, I'm assuming you mean Amazon, which is AMZN, which I also looked at. Thank you for your tip, Eric. Can you take a look at the VIX? I did. Thank you. Can you look at GE? GE looks like it's done. It's by done, I mean the drop is done. I think it's time for GE. You see, GE is still making a higher low from the crash low, and I think GE. I can't see GE falling much longer. I would wait for it to consolidate and wait for the moving averages to consolidate and use Consensio and cross to the upside. I think GE. Look at all these 13s at the bottom. I think GE is. I can't see it falling any longer. I would be looking to time GE to the upside sometime next year. Next, NVIDIA. Oh, I should add NVIDIA to the. I should probably put it next to AMD. NVIDIA. Should probably put GE here as well. Oh, NVIDIA looks bad. Oh, this looks bad. Looks like the drop's about to start on NVIDIA. You broken. You have not broken these. Wow. Oh, this is bad. Yeah, that escalated quickly. Red 2 below, red 1 at the high. Probably too risky to short. Yeah, NVIDIA could be in serious trouble. That's a weekly chart. Let's look at daily. Yeah, 9 at the high here. No help here. And 9 at the low. Little bit of a consolidation. Beautiful short. Daily NVIDIA on a red 2 below a red 1. This should be a red. And yeah, your short trade is just getting started in NVIDIA. Looks really bad. Watch out for earnings. Thank you, Daniel, for your generous tip and comment. Thank you for your comment, telling you the best. Thank you. Appreciate that very much. Daniel, thank you as well. Sovereign bond bubble or bullshit globally? It's leaning that way, isn't it? See, the thing is, if we are having a sovereign bond bubble, government bond bubble, that could be bullish for stocks. So I think this is a short-term stock crash. How do you recommend people who don't want to trade invest? Watch Tyler Jenks. He's the investor. Watch him. Okay, I'll look at 2 more stocks, then I'm gonna call it a day. CCI, is that a stock or? I know there's a CCI oscillator. Crown Castle International REITs. Nothing interesting. No comment. Next, AMT. American Tower Corporation, another REIT. Oh, this looks bullish. This looks very good. 9 at the high. This was a 2 above a 3. Sorry, this was a 2 above a 1, 3 above a 2, 4 above a 3. Breaking all the moving averages. The moving averages are not yet positive. This looks good. I don't know what the hell this is, but it looks good. All right, guys. This video has gone way too long. It is almost 2 hours. I have not done a traditional market video in a while. I believe I covered it all. And I'm not, it's impossible to cover it all, but I covered most of it. Once again, if you like my work and you appreciate my work, please check out the affiliate section. And if you're going to be trading at BitMax or at Deribit, which I still need to look at for those option trades, please register with the affiliate codes. It doesn't cost you anything extra. You will save some money. You'll also save even 50% on a VPN. Or your Amazon shopping. Feel free to click on one of these links and then move on with your Amazon shopping. I got my new Cryptomatic watch in New York. I'll have to wait till Christmas to go actually look to get my hands on it. All right, guys. I will talk to all of you on the next one, and come see me in Vegas for Unconfiscatable. Whoa, long video. I got to get some work done and then continue checking out Chiang Mai. Later, guys.